So today we're going to be going over the cheapest platinum miner in the world. This is Impala Platinum and it's May 11th, 2021, and the current price is about 1864. So who are they? They are formed in 1966 as a spin-off of Union Corporation, which later merged into Glencore. In 1974, they first began supplying General Motors with 300,000 ounces of platinum and 120,000 ounces of palladium a year for the catalytic converters to reduce exhaust pollution. They've operated as a platinum group metals miner in South Africa and Zimbabwe over this time period. They are a top 3 PGM producer, along with Sibanye-Stillwater and Anglo American Platinum. Their ticker on the over-the-counter market is MYPUY, IMPUY, and then on the Johannesburg Stock Exchange, IMP. Current market cap, I believe, is just under $15 billion with a trailing 12-month PE ratio of 5.86. So a big driver of their profitability has been rhodium price going absolutely nuts. Back in 2016, the rhodium price was $663. It's gone on a 4,228% rise over that period, and it's currently around $29,000. Annual production is somewhere around 600,000 ounces per year, and Impala is producing around 200,000 ounces a year. So they're producing about 33% of the world's rhodium production. And if we looked at the current value of that production, it's about $5.6 billion per year. So I went through and updated based on, they provided their first quarter production numbers, and I just kind of looked through compared to my previous numbers of last year's production. Their production of platinum is down about 0.7%. Their palladium production's up about 2.5%, and the rhodium production's down about 3%. It's just a brief update, but it shows me that the numbers for the projections for last year are likely in line with the results of 2021. With mining, there's always going to be these small variations all the time. I'm not reading too much into it. So I went through and updated all my numbers based off of kind of like the current projections of what we're looking for and prices and things like that. So I've also added nickel production in here. So we've got $69 million of nickel profits. I'm not sure if I might have only done that 1 quarter for the nickel profits, but they're pretty insignificant. The big ones is the rhodium profits and the palladium profits. These are the two big drivers. So what we're looking at is projected revenue of about $11.3 billion, which is quite substantial. And then we go over here, and I wasn't able to find necessarily the best all-in sustaining cost. Before I was using about $1,000. This time I went back to their annual report, and basically they said that it was $879 US dollars. So I just figured I'd use that and use it on the production that we're going to use here. And so cost of production is about $2.8 billion. So a market cap of $14.8 billion. We look at the projected earnings of $8.5 billion, and we've got a projected PE ratio of 1.74. I believe it was 1.94 before, so it's gotten even cheaper, and this is in part because the price of the stock has come down, and then just a few adjustments on the numbers, like reducing this cost. This cost may go up once we get the numbers from June, when they kind of do their full year reporting, but we'll just kind of go play it by ear from that. So basically I've come up with a projected dividend. So their goal is to basically pay about 30% or higher of earnings out into dividend. So we have $8.5 billion in profits this year projected. Annual dividend, I'm looking at $3.21 per share. And at current prices, that would mean a 17.21% dividend. It's like, that is absolutely nuts. Reserves and resources, they've got a very significant content of reserves and resources in the ground, which is fantastic. They've got roughly $600 billion USD of metal in the ground, and 15 years production just based on current reserves. but we have the reserves and resources here, and it's very likely that they'll convert a lot of this resources into reserves. Acquisitions, they acquired a North American Palladium, I believe back in 2019, which is kind of similar story to Generation Mining. Balance sheet, they have $1.4 billion in cash, $320 million in debt, for a net value of $1.1 billion. So this is just kind of cash in the bank that you're getting. And current dividend is projected at 5%, 5.44%, somewhere in there. Here's a dividend history. So for me, this is just kind of assurances that these are companies that like to pay dividends. We go back to 2010, it was 14 cents, 35 cents, 20 cents, 53 cents, 16 cents, 5 cents, 3 cents, 4 cents, and this is when they stopped the dividend. So this is kind of showing you that the Platinum Group metals prices were declining precipitously, and the company just wasn't profitable. And this is the time period that Sibanye came in and bought a lot of deals. They bought some mines from Anglo American, and then they bought up Lowman. They bought, I believe it's Aquarius. But now the Platinum Group metals are coming back, and you can see in this dramatic increase in the dividend. We go from as like a 6-cent dividend to an 18-cent dividend to a 54-cent dividend, and it's like I'm projecting that that's going to go up to, what are we looking at, about like $1.50. So another tripling of the dividend, because this is basically a triple, this is basically a triple, and I'm expecting another triple. And then I'm kind of looking for it probably to stabilize at that level. I don't think that we can get a whole lot higher on the revenue each year based on the metals prices. I think that these kind of will just fluctuate between each other. Maybe the rhodium price will go down, allowing for the platinum or palladium price to continue to rise. But I think that this is kind of like a good place, but there's still always potential for more upside with prices. So in summary, it's an extremely profitable company with a forward PE ratio of 1.74. Currently, I have Sibanye's forward PE ratio of 2.15. So they're both fantastic deals. Dividends likely to increase. I estimate that it's going to be $3.21 per share, which is a 17.21% dividend. Sibanye, I'm estimating it to go to $2.71 per share per year, with that being about a 14% dividend. They have low level of debt. They have North American palladium production. Extremely well positioned for high, or even rising platinum group metals prices. I think Sibanye-Stillwater may be a slightly better deal due to higher reserves, and they also have diversification into gold production. But Sibanye also seems to have a bit more competent of a management team, that they've kind of turned the company from kind of nothing back in 2013 into this major player. So it's very possible that they're going to continue to do that, and maybe they should have a bit of a management premium because of that. But Impala is just extremely exceptional value and provides a bit of diversification from Sibanye. So I think these are definitely both stocks you want to look at owning. Thanks for watching.